The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
Welcome back. We're going to be talking about money once again. It is about money. 1845, Frederick Bastiat was a French economist who wrote an open letter to the French National Parliament. He wanted help on behalf of the candle makers and the other people who were making lighting in France. He said that the French market was being flooded with light and action was necessary. 1845. What was he talking about and what action was he asking for? That's coming later in the program. It has an impact or has relation to some investments we're going to be talking about. So don't go away. I have a great guest who has a great story to tell. That's coming later in the program. But I wanted to start because in China this week was the 5-year meeting of the Standing Committee that governs China. Big things came out of that, things that are going to impact investments in the future. Now, if you think back on China, I've talked about China before. 40 years ago, 50 years ago, China was an agricultural society. It depended upon agriculture, and yet in these 40-some odd years, China has grown to be the second largest economy in the world, second only to the United States. To understand the implications of how that happened, I've talked about that before too, but I want to review that because things began or are in the process of changing. They've been changing for a few years now. They're going to continue to change, and with what's gone on this week, it's going to change even more. So if you look at China and where they were 40 years ago, there's a parallel you can draw. You know, I spent 1.5 years in France, and so learned quite a bit about French history. If you go back to the time of Louis XIV, Louis XIV, the Roman numerals, XIV. I like that. Louis XIV. Started his reign in 1861. And at the time he started his reign, France was very close to bankruptcy. They'd been through 2 major wars and 2 minor wars. And to finance that, you needed gold or silver or other species. They didn't use paper money in those days. Paper money wouldn't come until a couple hundred years later. They needed silver. They needed gold, but they didn't have silver mines or gold mines. They needed to have trade, therefore, things that they needed to make to trade for gold and silver. And so Louis brought in Jean-Baptiste Colbert in 1665, appointed him Treasury Secretary. And French industry at that time was mostly small crafts. It was pretty backwards. It really didn't compete worldwide. But under Colbert, France was to make some very significant changes. They began to build industries like glass and textiles. Some of those industries continue to exist today. They began to restrict competitive imports. They began to promote exports. And they wanted to produce exceptionally fine products, which at the time that Colbert came in didn't really exist in France. And he was ruthless, he was determined, able, and he had the full control of the finances of France. They went out and poached craftsmen from other countries. They went out and they got entrepreneurs from various other countries, and they offered really attractive incentives. They offered what they called a royal privilege. They gave the business no tax. They would finance it by the government. They guaranteed that the government would buy all the production they could produce. They sent spies into England and other countries to find craftsmen and to steal the secrets of industry. The first English steam engines were shipped to France. That was what was going on under Colbert. He built factories that employed over 1,000 workers, something that was completely new in France. Paid minimum wages, put the people into dormitories, had them working 14 to 16 hours a day with the only days off being religious holidays. And he complained to the Roman Catholic authorities that there were too many Catholic holidays. He wanted the people to work. He encouraged women to marry when they were before they were 20 because he wanted to have more workers. And if they married under 20 and had 6 or 8 or 10 or 12 children, that meant more workers for the factories. He pirated technical expertise, stole intellectual property. He took what he needed from the rest of the countries and brought it to France. And if the craftsmen or if the entrepreneurs or if the business people actually were leaving France, they were arrested. They were thrown into prison. They could end up on the king's boats, pulling the oars. They could end up being executed. That was the penalty for leaving France. If you were recruited in, the penalty was you didn't leave. And the same thing held true if you imported a product that was produced in France. If you imported silk, for example, some silk manufactured clothing from another country that might have a higher quality than you were producing in France, you could be executed for that. That was the penalty. That's what launched France onto a large-scale industrialization, mercantilism. You know, the same thing was put into effect in China. If you look at what the ruling party, the ruling Communist Party, the one that met this week, they controlled the land, they controlled most of the economy, they controlled the military, they owned the banks, they can finance the projects they wanted to. They were the ones that set foreign policy. They decided what was important and what wasn't important. And they opted for some capitalistic practices without giving up control. They could make the loans they wanted to. And if they wanted to build a road, they just laid out the plans and built the road. If somebody had property in between, too bad. It just went through. They owned all the property. There were no legal restrictions. They built entire cities. They built dormitories for the workers. They built apartments for the workers. And they went out and they acquired modern technology. You've probably heard of a lot of the stories where they went out, partnered with a company, for example, the high-speed trains. They partnered with companies out of Japan, with companies out of the Netherlands. Then they started their own Chinese company, not in partnership with those companies. Said they made a few improvements, and they used all the intellectual property that was brought with the high-speed trains that came into China and made their own trains. They were like Colbert. They gave significant incentives, low-cost labor, modern infrastructure. They convinced companies that manufactured in other countries to move to China. They focused on exports, and they put a premium on exports, so much so that those exports were oftentimes supported by government subsidies. You know, it was something that moved China very, very rapidly. In less than 4 decades, they went from a agriculture, farming type nation to the industrialized country that exists today. So that brings us up into the last few years. The new leader, the last leader for the last 5 years, has been Xi Jinping. Very significant what happened this week because they select a committee that runs the country of China. Big meeting. Once every 5 years, it lays out the 5-year plan. And of that big meeting, I don't know how many thousands attend, there's a committee of a few hundred that become the leaders of the country. Xi Jinping put most of his supporters on that committee. And not only that, they made him the equivalent of Mao Zedong. That's very, very significant. He is now considered almost like a god within China. And his message, the economists called him the most powerful man in the world today. His message was this: he wanted to pursue the dream of rejuvenation with priorities, not with the economy, but with the power of the Communist Party. By 2035, he wants China to become the world's top economy, and by 2050, the world's top country, replacing America. That's where he is, and that's where the focus is. He's been declared an equal to Mao, and when he was at Davos, the big international convention which draws the leaders of most countries, he stated he was a champion of globalization, he was a champion of free trade, he was a champion of climate change and would lead climate change. When we stepped back from TPP, he stepped in. When we were stepping away from South America, he stepped in. They're now putting out hundreds of billions of dollars in foreign aid to build infrastructure in the developing countries. We're going to come right back. Don't go away. We want to talk about the implications for investments. I'll be right back after the break.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
96.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I've been talking about China and their mercantilism approach to business. That's what got them from an agricultural society to the second largest economy in the world. But things have been changing in the last 5 to 10 years. They've been moving with a new class of entrepreneurs, a class of entrepreneurs that's beginning to rival the entrepreneurs in America. If you look at China, if you look at the United States right now, we have 117 companies, private companies, those that are not trading publicly, but private companies that have a market value, a value of $1 billion or more. We had OfferUp on the program. They're one of the 117 unicorns. These are companies that have not become public yet, but companies, Uber, Airbnb. There's a number of those companies that are truly unicorn companies. They have a very large value, and they're staying out of the public markets for a while. We have 117. In China now, they have 89. That's more than the rest of the world combined. If you look at the billionaires, in America we have 552 people who are billionaires. In China, already 609 billionaires, more billionaires than we have in America. And they're not the same kind of billionaires of the oligarchs of Russia. The oligarchs of Russia were communist bosses who ended up taking over a certain industry or a certain number of factories, building up, selling off part of the factories, moving the monies offshore. But they started by taking established businesses, whether it be in aluminum, whether it be in forest products, whether it be in aircraft, whatever it was. They took those industries and from those industries, they developed their wealth. It wasn't something that they started brand new and built from the ground up. In China, these entrepreneurs, most of the billionaires, are people that started businesses and grew them up, just like a number of billionaires in America. If you look at the studies of billionaires, the large majority of billionaires are first generation. They're not people who have been handed down. They're people that started and have become first generation. And there's 3 reasons why these companies, why these entrepreneurs are succeeding. 1, the economy is the second largest in the world. So firms can reach scale very quickly in China. The language and the culture are homogeneous, and the infrastructure is new and excellent. Secondly, the Chinese shoppers are voracious and they're venturesome. They eagerly embrace new technology. When you think of the internet in the United States and think about the early days of email, I remember they used to ask me to speak at Rotary, University Rotary Club every year about the market. And I can remember in '96, I asked the question, how many people here have an email address? And there were like 120 or 140 people in the luncheon, and 5 or 6 hands went up. And I said at that time, remember when people used to say, do you have a fax machine? They don't say that anymore. And this is '96. They say, what is your fax number? There's an assumption that you have a fax. I said, someday your email address is going to be like that. They won't ask, do you have an email address? They'll ask, what is your email address? That was the slow period of time. You used to have CEOs of companies whose secretaries would read the email, type them up, give them to the president of the company, who would dictate his response, give it back to the secretary, who would send out an email. That doesn't happen very often. But think of that process. That doesn't happen very often in China. The Chinese are voracious and they're venturesome and they're eager to adopt new technologies. Think about the smartphone and the broadband penetration rates in China. Very, very high. They adopted more rapidly than we did in the U.S. And they're rapidly becoming a cashless society, much faster than we are. And the third reason is that most state-run businesses are inefficient and often even hostile to consumers. So it's very easy for small firms to rapidly pass up the big, cumbersome state firms that have been the backbone of Chinese industry. And now the leader of China, Xi Jinping, understands that, supports that, and encourages that. That's going to create competition for the U.S., not just in China, but in the rest of the world. And that's going to affect the way you should be investing. You should know that. Not to be invested in Chinese companies, but to be very wary of how companies that are domiciled in the U.S. are moving and creating revenues. That's something happening this week, and it's making Xi Jinping, probably, as The Economist says, the most powerful man in the world, and China, a country that truly will be a competitor to the United States. Anyway, that wraps that up. I want to introduce my guest today. Very interesting story to tell. His name's Aaron Bird, and he is the CEO and founder of Visible. Welcome to the program.
Definitely great to be here. I'm excited.
So why don't we talk about your background?
Yeah, so I spent most of my career building the technology that powers online advertising. So most recently working at Microsoft in the platform where Microsoft serves ads in their MSN.com and Bing and places like that. So I've been the engineering side of the technology that fuels internet advertising, and it's through that I kind of had the insight into Visible, and left Microsoft in 2011 to start the company.
So let's talk about Visible. What does Visible do?
Yeah. I think the easiest way to think about it is there's that famous quote of 50% of my marketing budget is wasted. The problem is I just don't know which 50%. We help marketers figure that out so that none of their marketing budget or very little is wasted.
So how do you go about this whole process? And what kind of advertising are you talking about? Are you talking about regular media advertising? Are you talking about online advertising?
Yeah, definitely. So first of all, it's a software as a service platform. So you don't have to install software. It's the new generation of software where everything gets delivered through the web browser. So in the cloud, we connect to all of their marketing and sales systems, wherever they may be, pull all of this data into one place, and then basically figure out which marketing is driving revenue. So it's all about measuring marketing to revenue and figuring out what marketing is driving the most revenue, how should I reallocate budget, things like that. And so it's a big data problem of pulling all this data into one place and stitching together what's going on and making sure that the marketing team has the insights they need to make good decisions. So
what kind of a company would be looking for your services?
Yeah, so we serve companies that have a marketing team working with a sales team. So this is usually someone selling to a business, but sometimes they're selling to a consumer through a sales team. And so if there's if someone has a marketing team that's driving leads to a sales team and they want better accountability to revenue for their marketing team and being able to optimize and make good decisions off of revenue, then that's where we can help.
So suppose I'm a person who hears you on the radio, comes to you and says, I think I might need your services. How do I know that I might?
Yeah, I mean, the easiest thing would be to talk to our sales team. You could go to our website. It's bizible.com, visible.com, and you could read a material, download white papers, learn more about what we do. We have chat on the website, so you could go on there and you could just chat with a live person and tell them more about your situation, see if we could help.
So let's take me through that process of, if I come to you, what's the first things that you're going to ask? What should I know?
Yeah, we want to know what kind of marketing you're doing, how important it is, how big is the team, things like that. So we tailor towards kind of mid-market and enterprise companies. So if somebody is an owner-operator kind of running their own marketing, then it's probably not a good fit, not yet anyway. But if you've got a marketing team of at least maybe 5 people, marketing is important. You're trying to grow the business or you're trying to sustain a very large business, since you're spending a lot on marketing, then that's when it really makes sense.
So I'm still trying to get down
to
the idea of when you're looking at a company, what sort of things, because most companies are probably going to be in a situation where they're selling to people. They know that they're spending the money on advertising, but they don't really know how effective it is.
Yeah. So if you're selling to a business, that's probably the biggest thing. So if you have a sales team selling to a business and you're spending money on marketing and you'd like to just, you ask the question, what are we getting out of this? Or how could we spend this better? If those are the kind of problems that you're facing, then that's definitely how we can help.
So when you say, what are you getting out of this? How are you going to track and know? I mean, if I spend my advertising dollars, I spend X amount on media, I spend X amount on LinkedIn, I spend X amount on Facebook. It's just I allocate a certain percentage. I don't know where half of my advertising dollars are effective.
Yeah, exactly. And this is how most of our customers come to us like that. They've kind of a budget allocation they've done on where they spend money. And what we do is we connect all the systems. So we connect to Facebook, we connect to LinkedIn, we connect to your website. And so we stitch together those LinkedIn ads, did they perform as well or better than the Facebook ads? And if you had another dollar to spend, should you put it in LinkedIn or should you put it in Facebook? And even more detailed than that, if you're the person actually buying ads on LinkedIn, you can see which ad. You book an ad on LinkedIn, right? How much did you spend on that ad, and how much revenue did it generate, and should you do more of that?
We'll be right back after this commercial. We've got a lot more to come, so don't go away. We just are getting to the beginning.
For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Aaron Bird of Visible. We started to talk about the process. And where we left off, we were talking about connecting to LinkedIn, Facebook's, evaluating the ads. So let's go back there. When you say you connect with LinkedIn and Facebook and the different online avenues. So what do you mean when you say you connect with?
Yeah. So, we have partnerships. We're actually the only way to measure revenue against LinkedIn ads. So there's no other company that can do that for you. So we have partnerships with them. And when I say connect, I mean like via an API, right? So we connect to their systems to get all the data. Like if you were the person actually managing LinkedIn ads and you logged into LinkedIn to go look at all your ad information, we have access to all of that programmatically. So our servers pull all of that in, and then we connect it. So if you run an ad and and Bob clicks on that ad and comes to your website, and then later becomes a customer, you can actually go to Bob inside Visible on his record and see he initially came in from this LinkedIn ad, and maybe later he came in from Twitter, and maybe after that he came by a conference that you had or something like that, or you had a field marketing event where maybe you had a dinner with him or something. So we track all of that in one place so that you can see what people call the buying journey. So you can see kind of all of the interactions that person had with your brand leading up to them buying. So that way you can see what's working and what are the things driving deals forward and driving revenue.
So I understand that, I'm a small business with only 5 employees or 4. And when we connect to somebody, we see an ad, we connect to somebody, it's one computer. It's my computer that's connecting with somebody. So they can watch my process of when I first connect and where I look and how I eventually end up buying. But when you're talking about a lot of large corporations, you may have several people that are linked in and looking, several LinkedIn, wrong word. Several people that are hooking up to look at the same ad or to look at different ads, which talk about the same product. How do you get to that? How do you know that that group of computers is the same person or same business?
So our customers sell to businesses, and so like you alluded to, there's a buying committee. Like more than one person actually buys when a business is involved in a transaction, and so we pull data in from lots of different places, including like the CRM, so Salesforce or Dynamics CRM, to be able to figure out who are the people that were involved in buying, and then making sure that we take into account all of their marketing interactions when we look at what actually moved this deal forward.
So you can look at the buying team, you can look at the manager of the team.
Yeah, exactly. I mean, and you can, we can track everything, right? So if somebody saw an ad on Wall Street Journal but didn't click on it and eventually came to the website, that ad may have influenced them coming to the site, even though they didn't click on it. Like we can measure that. So, one of our goals is to be able to pull everything in, to be able to measure every single interaction, whether it's they saw an ad, they clicked on an ad, or even things that are person to person, right? So you had a sales meeting with someone, or you had a dinner that you invited them to that they came to, or they came by your booth at a conference that you were sponsoring and you scanned their badge, right? So these are all marketing interactions, and these are all things that we pull data in from different systems to be able to measure.
And so you measure the effectiveness of each one of those systems.
Yep.
And I would imagine that you can calculate then a marginal rate if you add $1 extra on LinkedIn compared to $1 extra on Facebook, compared to $1 in whatever. You have a measure for each business. How effective is that?
Yeah, exactly. I mean, and that's what it's all about in the end, right? Measuring and understanding kind of what happened in the past. We really do that so that we can make better decisions about the future. And our customers use Visible to answer questions like that. If I had X amount dollars more, where should I put it? Or I need to cut back, right? Where should I cut? What's the lowest ROI that I should cut? Marketing teams also use it to help get more budget, right? So if you're a CMO and you have a marketing team with you, before having something like Visible,
Back up a second.
Yeah.
CMO.
Yeah,
because some people may not know.
Yep, yeah. So chief marketing officer. So,
Okay.
in a bigger company, this would be the person that runs marketing. They report to the CEO, and they're in charge of all of marketing. And typically that person has a budget that they're spending both on people and ads and events or various things like that. And so if you're that person running marketing, and you want more budget because you're doing well. If you don't have something like Visible, it's hard to go get more budget because your CEO thinks of you as a cost center. They think, I give marketing this money and I don't know what I get back, right? Now the sales team is thought of as a revenue driver, right? When I add a salesperson, they get more revenue, so they're driving revenue. So we help the marketing team look like the sales team in the sense that we help them be a revenue driver and not a cost center. So that can lead to marketing teams getting more budget because they can go to their CEO and say, you gave us $1 million last quarter, and we gave you back $2 million in revenue. So if you give me $2 million next quarter, I can get you $4 million of revenue, or whatever the numbers break out to.
So how does that work then on the sales side? Because you're looking at the marketing, but off the marketing side, the marketing people develop the marketing side, but it's still the salesperson that goes out and makes the sale or the...
Yeah, and it's not an either or. Conceptually, the way that we think about it is that marketing or the marketing function creates demand, and the sales team helps to service it. So it's kind of like if all you needed was salespeople, then why do you have a marketing team in the first place? And in the end, they both need to be doing well. The marketing team, or whatever it is that you're doing to do marketing, sometimes you have salespeople actually smiling and dialing, actually making outbound calls to create demand, and that becomes a marketing function. But in the end, you need to be able to have a marketing team that's driving interest, and then you have a sales team that takes that interest and actually turns it into sales.
So, and you do it on a quantitative basis. So it's quantified, it's the numbers.
Yeah.
So it's not the head of marketing that says, I think we get a better deal out of LinkedIn than we do out of Facebook.
Yeah, exactly. It's, if you compare it to the old Mad Men days where it was, all art and no science, because they just didn't, have any numbers to really go off of. Today's marketer needs to be able to do both. They need to be able to use science and data to make decisions. And of course, the creative and art aspect are still very important because you have to decide what kind of message and how are we going to deliver it and that kind of thing. But our software helps take that science piece and make it easy to do and not have to have the marketers do that on paper.
So that's for the existing, but businesses begin to change their message. How do you measure that? Maybe they change the message that's going to be more effective on LinkedIn than on Facebook. And the dollars if we lived in a perfect world, the dollars would immediately shift. But that doesn't happen. We don't live in a perfect world. How do you address that when there's a change in the marketing plan?
Yeah, well, I think, the world is dynamic, like you say, right? And so you need to be using something like Visible frequently to measure what's going on. And maybe this message worked with that audience yesterday, but it may not tomorrow. And so you need to stay on top of it. And that's also where, back to the art piece, right? The software is not going to tell you why the message doesn't work. It's just going to tell you that it's not working. And a smart marketing team then is able to say, come up with reasons why and figure out, is it the message or is it the audience or have we exhausted this? Those are all things they have to figure out, and we can give them software to help directionally point and kind of give them the information to make the decisions. But you still have to be able to do that. And I think you have to monitor it a lot, right? And it's not something that you just set and forget, obviously.
So most large companies have a multitude of products and a multitude of niches that they're marketing to. How do you handle that as well?
Yep. Yeah. So you can measure the effectiveness of marketing, by product line, by geography. So how are we doing in Asia versus North America? How are we doing for this product line versus that? You can also, measure by channel. So, are ads outperforming outbound calling or events, or where should we be able to allocate budget? So, however they think about their business, whether it's by geography, by business unit, then they can slice and dice the data that way to be able to make decisions.
So it is about slicing and dicing the data and really using the data to evaluate where you are on the marketing side. Yeah,
definitely. I mean, I think you talk a lot about trends on your program, and the trend, one of the big trends that we see is just becoming data driven, right? There's the world, the amount of data is just exploding. I think it's something like most of the data, over 50%, was created in the last 18 months or something, right? And so we're just inundated. So the marketers that can capture that and create value out of that are the ones that are going to win in the end. And that's what we're helping to enable.
So someone listening to the program who is interested in contacting Visible, how can they contact Visible and get started? Yeah,
definitely. Just go to bizible.com, bizible.com, and both if they're a potential customer, or we're hiring across all roles as well. So if great people are looking for a role, then go to bizible.com/jobs as well.
And what kind of jobs are you hiring for?
Honestly, I think everything right now. R&D, sales, marketing, across the board. We've grown the company at 150% in the last 9 months, so we're hiring a lot.
And that also means there's a lot of demand for Visible. You're effective and you're making things happen.
Yeah, definitely.
So anyway, it's one of the new trends. It's important. Don't go away, because we'll be back to talk about other things as we go forward. I'll be right back after this commercial break.
For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and, probably most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
Now.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So in 1845, a French economist, Frederic Bastiat, wrote an open letter to the French Parliament, National Parliament, an open letter, a long letter saying he needed help. The help was necessary by the Parliament. A law needed to be passed. Action needed to be taken on behalf of the candle makers and the other producers of lighting in France. Action was necessary because only by passing a law would windows be closed, shutters drawn, curtains drawn. And only that would offer protection from this competition that was ruining the candle making industry, that was ruining the other lighting type of, because their competitor was the sun. You know, it was a parody, of course. But today, not so much. That parody may apply to some of the things that are going on today, and it may be just as true today as it was in France. I got my MSA, now called an MBA, from Carnegie Mellon in Pittsburgh. Pittsburgh's location is at the confluence of the Monongahela and the Allegheny rivers that come together and form the Ohio River. The Three River Stadium is named after the three rivers, you know, the Monongahela, the Allegheny, and the Ohio. And one thing that I used to do, because I went to school a long time ago, but I used to like to go up on Mount Washington. Now, Mount Washington is about as high as Somerset in Bellevue. It's not really a mountain, but it's called Mount Washington. And they have a tram that starts at the bottom and goes up. So back in those days, I was single. It used to be nice to take a date up to the top of Mount Washington. There was a little restaurant up there. Overlooked this whole thing. And you look down, and J&L Steel sat alongside the river. And they had these smokestacks that blew flames 100 feet into the air. Dancing colors, dancing flames. It used to be quite a sight to see. You know, all of that's really gone. Yeah, there was a lot of pollution. You know, snow in Pittsburgh tended to be gray instead of white. You know, it had an impact on the environment. But, you know, the steel mills were born at a time in the epoch of the tycoons, the Rockefellers, the Morgans, the Carnegies, the Vanderbilts. You know, in 1874, the U.S. was primarily an agricultural country, like China, which I talked about. In 1837, you had the first Great Depression. It was related to cotton and the demand for cotton. 1874, there was no central bank. There was no one to put stimulus in. And from 1874 to 1907, there were 6 crashes, just like we experienced in 2007, 2008. Think about that. 30 years like that. 75% of the millionaires prior to the year 1900 prior to the 1870s, lived along the Mississippi. 75% of the millionaires. But as we went through that time, as we went through that period of industrialization, what I've talked about in terms of the super cycle, the first super cycle from 1870 to 1913, a new class of wealth and birth of industrialization was born. Those were the entrepreneurs. And by 1900, the U.S. was the largest producer of steel, low cost. We were supplying the world. From 1875 to 1920, the steel production rose from 380,000 tons to 60 million tons. You know, even from 1890 to 1900, if you look at steel, it tripled in those 10 years from 1890 to 1900. And from World War II to 1970s, the U.S. dominated world steel market. We dominated. We had 70 or 80 or 85% of the steel market. All of that was made in the land of the United States. People grew wealthy from the steel. It wasn't innovative. They were making small improvements. Think about the companies. U.S. Steel was a Dowstock, Bethlehem, Allegheny, Inland, J&L. Those steel companies, they made small improvements, but they weren't innovative. As Europe rebuilt, they rebuilt steel mills. As Japan rebuilt, they built steel mills. As other countries rebuilt from the wartime, they began to build steel mills, more efficient, more effective, and they began to produce steel that was significantly lower cost than the U.S. The U.S., by the 70s, was beginning to have trouble competing on a price basis with the rest of the world. The rest of the world was beginning to supply steel into the United States at a cost, even when you add the transportation cost in, at a cost which U.S. steel producers couldn't produce. So what did they do? They didn't become more innovative. They didn't go out and say, we have to improve the process. They went to Washington, D.C., and they said, what we would really like is a tariff on all that imported steel. We'd like you to charge a big tariff. And that's what happened. And the net result of that, think of the purity in the sun. They said, the sun's our competitor. In their case, the rest of the world's our competitor. Please put a tariff, keep the rest of the people out. Well, it didn't work that way. You know where Bethlehem Steel, Allegheny, Inland, and J&L are? They're long gone from the territory. We couldn't compete. We're no longer the dominant steel market. So putting that in today's terms, recently we had Boeing. Boeing said, we lost the race with Airbus. We don't want Bombardier to invade our market. They've made a plane which is far more efficient, or far more may be my characterization, is more efficient fuel-wise, is a better plane than the 737 we're making. Instead of upgrading the 737 or bringing out a new competing model, they asked the U.S. government, would you put a 220% tariff on Bombardier? Keep out the sun. That's what they asked. The net result of that was Bombardier, where Boeing and Airbus had forecast over the next 20 years they were only going to sell 300 jets. The net effect of that was Bombardier and Airbus put together a partnership where Airbus is now expecting to sell 6,000 of those jets. Not 300, 6,000. It's going to force Boeing to come up with a new design for the 737 a long time before they planned to. That was the net effect of that. Same thing. The steel mills. Now Whirlpool wants a tariff on washing machines. The solar manufacturers, the solar panel people want a tariff on solar panels made in China. We're getting into the point as we negotiate NAFTA where the U.S. is proposing duties and tariffs and making changes to free trade. When that happens, the net effect, long term, is to make us less competitive instead of more competitive. You heard about Visible? They're making companies more competitive by understanding where their marketing dollars should be going. That's a net improvement. That's better for those companies than to go to Washington, D.C. and ask for a tariff on their competitors from overseas. It's the innovative and improving. That's the future of where business and investments need to lie. That wraps up this week. I'll be back next week, so join me then. We've got more to talk about money at that time.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com. The following program sponsored by Adams Financial Concepts.